people, welcome to the Real Estate Real Talk YouTube channel. If a recession occurs, the value of your stocks may be at risk. However, this is a great opportunity for those with savvy real estate skills to make money. If you want to get into real estate during a recession, or if you already own investments, it is important to use a financial advisor so you can maximize profits in the long run. We pose this question: is buying real estate a good investment in a recession? If you want more of this content, subscribe to the Real Estate Real Talk YouTube channel and hit the notification bell. When a recession happens, people spend less money. This spends less money on discretionary purchases and focuses instead on essentials. They may start laying off employees to try to save money. Stock prices drop in the face of uncertainty about the economy. When the economy slows down, real estate can be a good investment. There are three primary factors that can make real estate a good buy. Historically, there's a low correlation between real estate and the stock market. This means that even if stocks are affected by a recession, the same does not translate into real estate market. In a time when employment is low, people still need somewhere to live. If the economy is unable to rebound and housing is in demand, property owners will have steady income from people looking for places to live. In an economic downturn or recession, you can find deals on homes that may be a bargain for those willing to invest in them. Of course, if we're in a recession, it's best to have a hedge against inflation. Real estate will tend to keep pace with rising costs and make for a more inflation-proof investment. While this won't help you during the recession per se, the real estate would still be managing to keep up with inflation. Best real estate investments for a recession. If you're interested in buying a rental property during a recession, the first thing to know is that it's wise to determine what types of apartment might work best for you. If you can keep tenants and make profits on your investment, this is a good way to generate income during a recession. There are various kinds of rental properties you could consider. These include single-family homes, tiny homes, duplexes, triplexes, and quadplexes, apartment buildings, condos. With more units, you make higher levels of income. However, you may have to take care of these units and be more responsible. You can hire a property manager to handle the rentals for you, but it will cost money, which means less profits for the rental company. Flipping real estate might be a good option for people who are not looking to buy properties for the long term. Renting property can be tough during a recession since there will likely be less ready home buyers. Flip properties during recessions can be tricky because of this reason. If you sell your home quickly, you could make a decent profit. But if the home sits on the market for a long time and doesn't garner any buyers, this will affect how much money you owe each month in mortgage payments. Warehouses and farmland, which are both types of commercial property, can become investments during a recession. Just like in residential real estate, people need food and basic commodities during a recession, so it's good to invest in things that can provide them with those things. Investing in student housing can also be a safe investment since students still need a place to live. In addition, demand for senior housing is unlikely to go away anytime soon, whether there's a recession happening or not. Commercial properties can be attractive since they don't require a loan. You can invest in real estate crowdfunding or an REIT, which can offer the benefits of property ownership without actually having to own property. Tips for real estate investing during a recession. Here are some helpful tips to keep in mind if you're interested in investing in real estate in a recession. Consider the area you are considering buying in, as location is an important factor when investing in real estate. When looking for properties for rent, find areas where demand is high and rental rates would allow you to reach your desired profit margin. One factor to consider when buying a business is cash flow. Cash flow is the amount of money you collect from rents minus the cost of expenses. You might need more of a cash reserve during a recession as rents are lower and inflation remains high. Interest rates may start at higher levels and interest rates may drop as the Federal Reserve adjusts rates. The timing for when a loan is taken out can impact their total cost. It is important to do your research and be a smart buyer. Don't rush into the process without thinking of the implications. If you are not careful, you may end up buying a property with lines or one that won't be zoned in your favor. You might want to take into account the different rates of return depending on whether you invest in an REIT or real estate crowdfunding. Although both provide lucrative bases, the investment for real estate crowdfunding is more likely to be locked up until 5 to 7 years. When investing in a real estate stocks or ETFs, pay attention to commission trading fees and expense ratios respectively. Also, when looking at an investment's performance history and risk profile, decide whether or not it is a good match for your goals and risk tolerance. To diversify your portfolio, you could invest in real estate during a recession. Researching different options for investment can ensure that you are buying a sector of the industry that will be recession-friendly. Investing tips. Interested in real estate investing? Smart Asset will find you 3 financial advisors in your area so you can find the one that's right for you. The service is completely free and you can start the process without a credit card or obligation. Rather than getting a conventional loan for a long-term one, consider the possibility of using a bridge loan for fix and flips. It's important to choose the best type of loan to maximize profits or ensure renters if you can't find one after purchasing. People are looking for investment opportunities to protect their capital during these tough economic times. Some people believe real estate investing is a safe investment regardless of economic swings. However, those who fail to execute their strategy in the context of a recession could put their investments at risk. Great Jones provides financial and property management services, giving them valuable insight during economic downturns. They offer property and financial management in Florida markets as well as Austin, Texas. In the last few tips, Great Jones shares their top depreciations to consider when investing during a recession. Real estate investment risk during economic recessions. The good news is that not all investments are impacted equally during economic downturns. Certain risks are worth considering before making any decision in the real estate market. There are 4 risks for landlords and real estate investors during periods like this: a limited number of buyers, higher risk of tenancy defaults, government intervention, shifting competition among certain stakeholders. And so, let's understand the following risk more. Limited buyers. With a decrease in spending power for the majority of the population, real estate investment can be a beneficial option. With lower prices for real estate, there are more opportunities for people to buy. On the other hand, this also means a potential risk for those who already have property. If an investor purchases a home with the intention of selling it for profit, they should be hesitant to sell their property during a recession. The resale value will be severely impacted by the state of the economy. Tenancy defaults. A major causes of the 2008 financial crisis was defaults and foreclosures. This means that it may now be a good time for real estate investors to buy low-cost property or for landlords to buy a property which is currently being rented out but that is up for auction. No one wants to evict a tenant, but during recessions, it's unavoidable. Investors that operate in the rental market during recession should be prepared for defaults and evictions. It's also important to note that eviction may lead to a vacant property difficult to fill in during recession. Prepare for the inevitable by preparing the following. Make an action plan for rental collections and notices in order to alleviate delinquent rent. Hire a property management company to help tackle complaints and defaults. Offer your tenants fair warning that you will not accept defaults that surpass lease terms. Become compassionate and attempt to maintain good relationships with tenants till action is required. The last point is of the utmost importance. Tenants are more likely to pay their rent on time if they have a good relationship with the landlord even in a recession. Landlords should learn to be transparent and compassionate towards their tenants in order to limit risk. Suspended evictions. The government is always quick to intervene during a recession, and recently many states suspended evictions to combat the economic effects of COVID-19. Eviction moratoriums present as one of the most blatant risks for rental property investors during recessions, but many landlords aren't too happy about it. Eviction halts usually only last a month or 2, and you may be able to recover your losses once the period ends. Keeping good relations with your tenants will assure repayment. Thankfully, there are ways to counterbalance your probable losses. Instead of threatening evictions, offer tenants a payment plan if they can prove they are suffering from economic hardship due to the recession. Keep up to date with eviction and foreclosure laws so that you can maintain a perspective on the changes happening in your community. Before carrying out an eviction, you should consult with property managers and lawyers to determine how long the tenant is allowed to stay after defaulting on a payment. Business owners have two options: work with their clients to keep them in the home or proceed with evictions. It is preferable to work with your clients, but recessions will likely result in some evictions. Shifts in competition. Lastly, recessions affect the competitive dynamics of the real estate market. The location of the current buyer is not relevant to a salesperson. Therefore, there are more forced sales and fewer strategic sales, which decreases the price of real estate. Flippers. With dire markets and fewer buyers, flipping become less profitable. Real estate agents. There are now fewer buyers and sellers in the real estate industry, making it difficult for agents. The majority of residential real estate investors are asking, what will this mean for me? When few are interested in investment properties, investors can buy them at lower prices. But this requires investors to spend more time investing and holding onto assets. This means that residential real estate assets need to retain some liquidity and cash on hand so that they can offset the effects of being forced to hold assets longer. Real estate recession investment opportunities. Investors who are able to withstand the volatility of the real estate market can find opportunities to grow their wealth during smart investing during recessions. There are several economic challenges that buildings provide a sound investment choice, especially in times of economic crisis. This includes a lack of inflation, depreciating values and income, and changeable market demands, distressed sellers and lower property prices, cash investing opportunities, generation of stable income through rentals, lack of volatility. Investing in real estate during recessions works best when you take each factor into consideration. Distressed sellers and lower property prices. Lower prices make the market a good opportunity for those in the market for residential real estate. While there is a risk because investors need to hold on to an asset longer before they can sell, lower prices also mean a great deal of profit potential. Certain entities are forced to sell properties at lower prices at different times. One example is the economic recession with foreclosures and distressed selling. Investors can make a ton of money on these investments by selling them later after the market conditions have improved. You should expect to hold on to these assets for long-term rather than short-term. Cash investing. When cash proves to be valueless, real estate investors know that they are still in a level playing field. If you're looking for an investor that can offer cash in exchange for properties, you should buy during periods of economic turmoil where prices are low and rise again long-term. It is always good to think about the future and prepare for it. The liquid market means that you can hit competitors with low prices during periods of recession. This liquidity leads to lower prices even when times when they should not be available. Rental income streams. The rental market is one way to hedge against unemployment in a recession as a stable income is generated. Towards the end of a recession, it is a good time to invest in rental assets. To avoid investment losses due to defaults, consider these 3 tips. Low-income housing is a bad investment because of the risk of default. To keep residents in your property for the duration of the recession, consider signing a long-term lease. Rent prices should be set fairly so that tenants are happy and payments are timely. Great Jones are a property management partner who will manage collections, queries, and service appointments for you, guaranteeing tenant satisfaction and increasing your monthly cash flows. Investors can avoid risk by selecting the right tenants for rental properties. Lack of volatility. Volatility is more common during economic recessions. We can see this in the stock market, which rises and falls quickly with financial instability. Every so often, prices will go down, which can be worrisome for real estate investors. Though the real estate market is always stable if you're looking at it, it's sometimes in trouble during a recession. However, this means that real estate is one of the best markets to invest in during unstable and uncertain times. Is now a good time to invest? Investments in a residential real estate can provide safety to people during a recession. The opportunities available in the market make it an ideal time to invest in residential property as long as you know the risk. Real estate is not as volatile as other investments such as stocks. You can mitigate risk by partnering with property managers who will take care of the day-to-day operations and find tenants who can pay rent on time. That's it for this video, Real Talker. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!